Gemma Dale from the NAB joins us at the desk. We've also got David Sokolsky, of course, from Concentrated Leaders Fund. He is in the studio as our guest host. Gemma, pleasure to have you on the show today. Thanks for joining us. Talk us through what you're seeing on markets more broadly before we get sort of stock specific, because it's interesting moves. We've had a few weeks of real solid gains for the market. Now we've obviously seen this bit of turnaround on Friday in the US, and that's followed through for our market this morning. We're down over 1%. Is this going to last? What do you make of it?
I think with our investors, someone put it beautifully this morning, which is they find the decision to buy much easier than the decision to sell. So we've seen a lot of active buying, with the exception of our SMSF investors. So they have been selling down. We had a look at the last 12 months. So they've been selling down 48 out of the last 52 weeks, which is the exact opposite of their usual behaviour. We're sitting on a lot of cash. So the cash book is at all-time highs. Rates are not exactly spectacularly high at the moment and have been coming off. So when people are holding that much cash, anything that looks like an opportunity is worth jumping on. So we've seen what's been interesting over the last week in particular is people jumping all over little things. So not the sort of big stocks on weakness that they would generally go for, and they went for a lot of that through reporting season. We saw huge buying in CSL on weakness, that kind of stuff. So we haven't seen that so much as the more interesting end of the market coming through, and names we'd never heard of before. People
so the real small
excited.
Caps, is that what?
So we've seen some interesting. Split It was #1 last week and the week before, and for something like that to make it into the top 10 is enormous. When you look at our top 10, it is pretty consistently, 4 banks, Macquarie, exactly what you would expect it to be. You see our investors moving down the spectrum and trying to find some opportunities where they'll get some growth. So Split It's been absolutely huge, but Afterpay dropped out completely. There was a little period where they were trading Zipco, Split It, and Afterpay, and sort of trying to look for the most exciting opportunity. They dropped the other two and went, Split It's where we're going to make our move.
Yeah, I wonder if it's because the other two, well, Afterpay certainly had that big run up. They thought there's no longer that opportunity. Let's move on to Split It.
Yeah. Well, what was surprising though, last week dropped 14% in a day, and they didn't buy it anywhere near as heavily as we expected. So it's quite fascinating to watch the moves on that one at the moment.
It's just interesting though, David, in terms of Split It, because it is being sort of billed as the next Afterpay, at least probably by the company and by brokers of the company at least. But I mean, is this investors wanting to make that same sort of not quick buck, but I mean, Afterpay certainly rallied a huge amount that was somewhat, an exponential amount, I would say, that was somewhat unprecedented. So do you think that's what people are hoping for Split It? And what's your take on this sort of smaller end of the market, the copycat market?
Yeah, look, I think a lot of it is, a lot of people missed out on Afterpay, in fact most people, and they don't want to miss out again. So they think Split It's going to be the next Afterpay, and hence they just jump into the market and try and take that. And you did see it with Zip as well, and you've seen it generally with the tech space, but those payment platforms in particular have just had a lot of momentum behind them. So
is that warranted? Is there a lot of upside, do you think, for that payment space? It's somewhat a new sector of the market, isn't it?
Look, that's a fantastic question. If I knew that. I think they're all, across the board, priced on, I would say, offshore hope and a lot of promise to come through, because, you've got to remember, earnings just aren't there. So people are looking for these platforms to be able to grow and take significant market share offshore. And, if something like an Afterpay or a Split It can get 5% of the US market, then they'll be monsters on our domestic market. So whether they can do that is yet to be seen.
Gemma, what else have you been watching? Interesting trades sort of on the smaller end of the scale. Live Tiles has been one of note.
Live Tiles and Emerge Gaming were the two that came through really strongly last week. So both on news of effectively tie-ups with other businesses, and so opportunities they're creating in new markets. Very similar to the story about payments, though. Opportunistic, I think, for a lot of our investors looking at these kind of spaces. They're technology focused, if not completely technology based, and so investors sort of seeing it as something that they can have a bit of a run with. The other one that was quite interesting last week, so we saw two things that we know they like. So New Farm came off 24%, went to an 85% buy that day for our investors, and Platinum when Care offloaded 20% of his holding, which was pretty significant, at a 10% discount. Our investors were all over that, so that was a 95% buy that day. So they are still looking for names that they know and love on weakness, and they will buy those, but this trend downwards looking for more speculative opportunities is quite interesting.
What about international trading? What's that doing in this market in particular?
It's always really fun to watch the international stuff, and what's been most fun over the last few years is we started with really big names. So the top 10 were 9 US tech companies and Berkshire Hathaway.
Yeah.
It was very predictable what you would see. Now we've seen a real trend into Asia and this real enthusiasm for the China consumer. And the one that we had not seen before was number 4 last week, Pinduoduo. We had Pinduoduo. This is apparently the Groupon of China. It is. It doesn't have the earnings yet, right? So we're talking about not having the earnings yet, but it's backed by Tencent. It's backed by Sequoia Capital. So it's got some big backers, and it's moved into the value end of online sales. When I say value, I mean down the price end rather than the quality end. So it's very much aimed at the less quality focused Chinese consumer at the lower end. And the technology is really funky, like it's really cute. There's lots of apps, and the way of acquiring things is gamified almost, one might say. It looks really cute, it's very engaging, and they're seeing growth. So our investors have picked up on that one. They're quite excited about it.
So they go into the individual companies themselves. What about trading ETFs though to get that exposure to those global markets?
We do see a lot of ETF trading, and we've seen it obviously grow in line with the market, which has been extraordinary. Now they're larger than LICs on the domestic market. It's been huge over the last few years. The one that we've seen come through in the last couple of weeks, huge trade sizes, $400,000 average trade size buying a strong US dollar fund. So that is a very interesting position for our investors to take, and they're obviously some reasonably big investors if that's your trade size. So they're feeling that that perhaps some of the economic weakness coming through is not going to affect the dollar, and that's where they want to be.
Well, that's somewhat where you stand, right, David?
Yeah.
In terms of US dollar?
Yeah, look, I think it's had a good rally. So
Yeah.
you've got people probably jumping on towards the end of that. But definitely I think the bias at the moment is still to the upside for the US dollar. So people are still backing that. I think that the point about ETFs and index funds is an interesting one, because it's not our sort of world that we operate in, but what we hear a lot of people are doing is sort of indexing, you know, say 60, 70% of their portfolio to the top 50 or so, and then taking that extra 30% and then having a bit more of a punt on the small cap sort of level, and then they can basically get the market, but also just, you know, ramp up their returns a little bit as well. And that's probably why you're seeing a lot more of that interest at the sort of mid to small cap level as well.
Interesting.
Yeah, very interesting. We'll have to wrap it up there, though. It's been a pleasure having you both on. David Sikulski from Concentrated Leaders Fund, thank you so much, and Gemma Dale from nabtrade.
Thank you.
See you soon.